Friends, how we doing, and welcome back to Continues to Tick. The journey continues. I will say, this is a 1 week in advance upload. I'm currently on my way to Arizona for a gem show, and there's a backstory to it, but overall, it's a good thing. I'm on vacation. I won't have enough time next weekend to shoot this video or throughout the week, so I wanted to do it in advance for you guys. So in case you look at my portfolio and you see a drastic change to my next video 2 weeks later, that's one of the reasons why. I'm currently on my way to Tucson, Arizona for a gem show. The backstory to it is my partner back in the year 2020, during the COVID madness, she actually worked as a recruiter full time. She had started a side business selling fine crystals and minerals just as a side business, and eventually, long story short, that side business became her main business. And now she does it full time. She broke away from the rat race, and I saw it happen firsthand. And then as for me, I have a very standard career path. I'm a nurse, I'm an RN, and it's very standard, right? So for me, I just enjoyed watching that aspect. So we're on our way to Arizona to get a bunch of crystals in bulk and stuff like that. So it'll be a fun little trip. But because of that, I wanted to get this video out to you guys. But as you saw by the title, this is a big monthly dividend portfolio review of January 2024 of this new year, friends. This new year. But as always with these monthly dividend portfolio reviews, I go over a lot of things in detail, a little bit more than I typically do. Therefore, in this video, I'll make sure I touch on how much I currently fund my portfolio and how often. I'll go a little bit deeper into my sector allocations and percentages. And part of that, I'll show you some of my best and worst performers per each sector. I'll also tell you my current number of holdings, my current portfolio's dividend yield, what is my current expense ratio, and what are some of my current short and long-term plans for the portfolio. And then of course, last but not least, I'll show you how much my dividend portfolio currently pays me in dividends. So let's begin. So here we are, friends, as always, in the Jesse's cash flow portfolio. I'm currently shooting this the Monday prior to when you'll see it on this Monday. But as you can see, all time, friends, we have a return of $13,289.50. This equates to an all-time percentage return of 33.89% all time for the portfolio. And I would say for a dividend portfolio, this is pretty good. I'm curious to know how you guys are doing. I've been doing this for a while. At this point in time, I would have to admit, I'm at a good stance. It's hard to always know how these markets are going to move. And if you noticed on this channel, I don't talk about news. I don't talk about the actual specific market moving events. I don't talk about those things. I specifically just focus on the fundamentals. The fundamentals are just having a plan, investing systematically, leveraging time, having a funnel each and every week or every month, cash going into this portfolio. And then it's up to you whether you want to, automatically buy holdings or do it manually, just whatever works for you. But those are the fundamentals. That is all I focus on here. I know there's a lot of channels that focus on news and, why did the market take a hit? Why is it booming now? But not on this channel, friends. This channel is about the fundamentals. It's just to show you a case study of what can happen over time. And I don't know the end result. I think it'll be a positive one, but I continue to learn, adjust and pivot along the way. So hopefully it's just some example that you guys find interesting to follow. I see people continuing to join the journey, and I think it's really neat. But with that ramble out the way, friends, let's continue to move down here. So M1 Finance, they've changed their whole setup. Before, when I used to kind of adjust my time range here, it would change up here. But now it's all up in this box down here. So for example, this past week, I had a market gain of $457, which is overall 0.26% return. And as far as my month return, right, market gain, $449.83. And as you can see here, this equated to a 1.03% return. And then as for the big one, friends, I already saw this earlier right before I pressed record, but 3 months, right, the 3-month window, we had a market gain of $8,256.16, and then earned dividends of $600. This overall equated to a total market gain of 13.16%. And as far as year to date, We're on the 22nd today. Next week when you see this, it'll probably be the 29th or so of January. And so far this year, we have a negative, right? That's what it says, minus 220.14. And that's year to date. But friends, one thing I always like to mention here is if you're curious about what exactly is in my portfolio, just before we go down below here to the sectors, there's always a link in my description box down below. You can go in there, click on that link, and you can see everything that I'm holding. Go at your own pace. I just like to mention that because when I first started, I know I always liked just kind of comparing, taking a look at other people's portfolios, getting an idea of how it is they structured it, how they built it, how they set it. So if you're curious at all, there's that link there, friends. Click on it, it's free. And as far as the sectors, friends, here we are. As far as my biggest sector is real estate, set at 13%. We have consumer staples following that at 12%. We have my ETF and index funds at 10% each, or together, which is 20% of my portfolio. I do like to be diversified in that sense. And I'm also a big believer of tech. I like tech in terms of having a dividend growth portfolio. I also have that set at 10%. And then I have utilities also at 10%. Because it kind of stabilizes a little bit of the portfolio. Utilities are kind of one of those boring holdings, but it's nice to kind of have in your corner. And as far as financials, I have it at 9%, industrials at 8%. I'm a big believer of healthcare in a sense. Not too much that I want it more than this, but I have it at 7%, where for some people, they might have it a little bit lower. But as you can see, it's always kind of in the red. It has its days and its moments. But for the most part, lately, it's been in the red a lot since COVID. And then I have communication set at 5%, energy at 3%, materials at 2%. And then last but not least, I have my consumer discretionary 1%. But adjusting my sectors here, we just went by allocation. Now let's go by the best performers. So the best performer continues to be tech at 205% return, which equates to a $6,840 gain, which is pretty massive, especially in comparison to my portfolio size. And if you take a look here, the biggest gainer has continually been Nvidia. And this is with me even selling a $2,000 chunk just for me to kind of go to Greece and have a little bit of play money. So if not, this would have been $2,000 higher or higher than that because it was $2,000 worth at that time. But it continues to just boom. And if you take a look here, if you see my actual target versus my target, my actual target's way higher than my target. But I'm not going to sell it. I'm not going to rebalance it. This stock, they continue to make moves in a positive direction. And as you can see, Oracle's following that, and then IBM, which is funny because those are a better performer than Apple. And then I have energy here at the third best performer, and then so on and so forth. But if we look at the bottom and I take a look at my worst performers, it's currently healthcare, minus 13.38%, so not the worst. And it gets even better from there, minus 6% from utilities, practically even with consumer staples, and then practically even with communications. Communications for the longest time was actually in the red, actually my worst performer. And a lot of it had to do with Comcast a while ago. So I'm curious to take a peek here. So Comcast is just minus 1%. Verizon's minus 15%, and AT&T, continues to do what AT&T does, which is stay in the red. But look at this, Omnicom is leading the pack quite a bit, 69.30%. So, and the question, friends, how much do I currently fund this portfolio? So at the beginning of the year and for the majority of last year, I was doing $100 and then eventually $150 every single week. Back then, I was going through a lot of change. I went through my master's program, finished it, paying it out of pocket, and it was towards the end of the year for the last few months where I did go from $100 to $150 every single week for my funnel, or the funding rate, you could say, into my portfolio. But again, early this year, unfortunately, I did have to make another adjustment. We're back to $100, and a lot of this was because I'm still in this job hunt. I gave an update a while ago that I'm kind of in this, conundrum in a sense of, do I leave state work and my pension or do I stay? Well, I do have an update. I've been job searching for a while, and it looks like I'm finally aligning my next job opportunity, and it looks like it will be with the state The odd thing about it though is that it is a promotion, but through this promotion I take a pay cut. I know it doesn't make a lot of sense, but I currently make a good amount of money working as an RN for the state prison system. So this next opportunity is working as a nurse consultant. So in a sense, I have to take a step back and pay for this promotion to then eventually use this nurse consulting experience to take a way bigger pay bump in the future. And I know I've talked about it many videos ago. My ultimate plan was to become a nurse consultant for the state of California, right? Because if you look online, the wages for that opportunity, they increase substantially. But that's for the second and the third level, or the higher level nurse consultants. But for me, just to be able to get my foot in, that's a big deal. So I was given a tentative offer last week and I went ahead and accepted it. But because it's state work, it takes so long, to kind of get my actual start date, which I'm still waiting for. But because it's going to be a pay cut, I'm already starting to adjust my finances today. It's not a huge pay cut, but it's significant enough that I have to adjust myself, at least to get myself ready for it. So that way when I take that pay cut, I'm not drowning. So starting from now, I'm already starting to see it, trying to prepare. So over these last 2 weeks, I already adjusted my funnel from $150 to $100. And I'm going to do this at least until I stabilize once again in the future. But that's my current funding rate. And as far as my career, the topic that I have for this video in particular, I'm going to be talking about careers. So if you're interested in that, stick to the end of the video and I'll give you just my general thoughts on the importance of a career path. Stick around for that. That's my topic for this video, as you saw by the title as well. And here we are, we continue to be in the Jesse's cash flow portfolio. And this is the part where I show you a little bit more of the data, right? Just like I promised in the early part of the video. And just to be transparent, I have 51 holdings in this portfolio. I've explained it, throughout these videos over time. If you're curious why it is that I hold so many, you can ask me in the comments, but in short, it's just something that I've done from the very beginning of this portfolio. I'm trying to grow into my holdings, if that makes sense. So I'm trying to grow into my holdings. That way, one day when I have a substantial sized dividend portfolio, I'll have these holdings that I've dollar cost averaged into. And that's kind of the main idea with that. And as far as my dividend yield, I'm at 3.329%, which is kind of right in line where I like it. Anywhere between 2.8, 3.3, maybe as high as 3.4. That is the general area where I like to have my dividend yield. And as far as my expense ratio, you can see it right here. It's 0.01%, which is fairly low. And I like that. I like to manage my own portfolio in a sense. I do have an index fund or ETF in here, and I also have real estate. They take a little bit of a chunk, but overall, compared to the overall size of the portfolio, the expense ratio continues to be relatively low. And just before I get to the actual topic of this video here at the very end, I did want to give you my short and long-term goals for the portfolio. My long-term goal, friends, I'll start there. It continues to be to retire by the age of 52. It was 50 before, but if I get this new job, it kind of changes my formula a little bit for my pension. So 52 would technically be my earliest retirement year with full health care benefit, my pension as well. And, so many years in the state, and hopefully with that, investing over, decades on end. So that is still my plan. That is my plan in the horizon. I continue to aim for that and continue to plan to live comfortably along the way and then ultimately retire comfortably. Retire comfortably is the goal, not just retire. And there's a difference. So that continues to be placed in the horizon. That is my end goal. But just to wind it back, in the short term, like I said, I'm trying to find and figure out my finances. I accepted a tentative offer, for a nurse consultant, one position in the state of California. And I'm looking forward to that opportunity because that means it'll open the door for the opportunity that I want in about 2 years or 3 years from now. But I have to take a pay cut. But for me, I think it's worth taking a pay cut and just adjusting my finances. My goal is to hold on to the $100 a week funnel, at least until I stabilize and maybe can increase it a little bit more. You could be saying, Jesse, where are you taking the hit financially with the pay cut, apart from lowering your funding rate and your dividend portfolio? Well, I realize that if I take this opportunity, I take this pay cut, I have to kind of kick the can on my debt paying off plan. That means I'm gonna have to lower the rate in which I pay off my debts as well. But I think it's an opportunity to take advantage of trying to get my foot in the door now for an opportunity and experience job that I need to then eventually open the door for a solid career path where there's a substantial pay bump in the future. So I think taking a 2-year investment into just this opportunity in my career will open that door, which then will open up my income. So that is my plan. And at the same time, it's probably worth it for me at least, because I started working for the state and this pension system at the age of 24. By the time I retire, I'll have 26, 28 years in at the very minimum and full healthcare benefit covered. So there's a lot of benefit there. So I can't take that lightly. So having this opportunity for me, I think is worth it. But $100 every single week is how I invest for now. And just before we get to that very end, I almost forgot too. Let me go ahead and show you how much I actually make from my dividend portfolio in dividends. And if I want to see how much I'm getting paid in dividends, it's $2,313.51. And if you break it down by a month, it's $192.79. If you break it by the day, $6.34. And as far as the dividend yield, it says it's 3.06 here. On M1 Finance, it said it was 3.3. So there's a little bit of a discrepancy, but overall, it's probably somewhere in between. I would actually lean more to M1 Finance's calculation, but their website has been kind of weird. So, who knows, right? Who knows? But anyways, friends, that is how much I get paid in dividends currently. And as we continue to scroll down, friends, making our way to the very end of this video, speaking about careers, I'm telling you what I'm going through currently at this moment. Maybe some of you guys can relate to having to job hunt or job hop. It's a stressful time. It's not the best time. But for me, I realized I didn't want to continue to work in a prison. I can't take my phone in there, management there, the structure there in terms of how I feel being there for various reasons has changed. And because of that, I felt like it was necessary to make a change. I kind of ran out of my runway there in terms of, my career projection and my income. I had to make a change. So because of that, I went on a job hunt, and it was over these last couple months, friends. I started like in October, and, I finally accepted a tentative offer, but because of this, and it's with the state, I still have to wait a couple months to actually get that opportunity for the start date. I still have to wait a couple months to actually get the start date and be there, start working at that new opportunity. So it's still going to be a while, but at least I have some direction now. And as we scroll down here, friends, I put 3 reasons why. Stability is one, income is one, and projected outcome is one. And I'll just briefly touch on these just to kind of give you an idea of things to think about, things to chew about. One of the reasons why a career path and being successful within it is important is stability. In this life, you're going to continue to face adversity. You're going to continue to face change. Having a stable career path is pretty critical to the outcome that you're going to live, to the life you live today. Having that stability is very important. Having a career in which you can grow within, you can project forward in, it's all very important. So it all kind of goes in line with this idea of having, financial stability, career stability, not worrying about layoffs all the time. That's why for me, I decided to go and work for the state. In this sense, I get better benefits working for the state. I don't have to worry about layoffs as much as other people in the private sector. There's certain career paths that have more stability. Healthcare tends to have it. Tech tends to have the opposite problem. They tend to actually have a lot of layoffs from time to time, and people tend to have to job hunt. It's just kind of part of it. But stability is one of the reasons why it's important to have a successful career path, and one you can depend on. Having it be reliable is pretty important as you continue to face these changes and these adversities in your life. And another reason why is income, friends. This is your shovel. The amount of money you make, friends, will always dictate the ceiling, the way you live your life, the quality of life that you have, and your experiences. I know oftentimes we don't think of money as being, the end all be all, but it is a tool that helps you in this life. There's people that have money and they don't have anything else, so they may be just as miserable. And then there's people who have family and have no money, and maybe they're more content. But the idea, friends, is to work on it all, but also to have income. You want to have income. You want to have a shovel that you can build in this life with. This is a capitalistic society. Whether you want to play the game or not. Some people like to play, some people don't like to play. I am learning to play. I kind of enjoy it. There's parts I don't enjoy. If you're not making the money that you want, you're not going to be able to buy and live the life that you want. Having to stress about money is not a good thing. If you stress about money, it really takes a lot of your mental bandwidth from a lot of other areas in your life. But if you have your income in check, from a solid career path with projected, incremental raises throughout the years, all these things help. And this is another reason why it's important to have a successful career path. So when I think of this third one, friends, I think of projected outcome. I think of quality of life. When you think of having a good quality of life, there's many aspects that go into it, right? The growth of you as a person. But there's also a component to it that is financial. And that is the main thing that I'm trying to explain here, is that financial growth leads to that quality of life that you want. Because there's always this financial component. Oftentimes you want to live a certain way because you want to spend a certain way, you want to buy certain things. And even if you don't want to buy things, think of it as buying back your time. That increases your quality of life. If you have a successful career path, if you have a solid shovel, you have a stable income source, all these things help you live a life that you want to live. All these things kind of go hand in hand. It's just a general picture. The reasons why it's important to have that solid career path, a successful career path at that. But as always, friends, thank you so much for being here, joining the journey once again. For my next upload, I'll make sure to upload that in real time. This was just, something that happened here in the spur of the moment. I got to go pack and I'll be in Arizona tomorrow. But as always, friends, continue to leverage your time. Take advantage of it. It's important. One day, eventually, it will catch up to you. You'll either thank yourself or it'll be the opposite of that, friends. Don't live life with regrets. Continue to build, adjust, and pivot. See you on the next one.